Good afternoon, everyone. I'm Jamie Leinert. I am the Client Development Specialist here at LIFO Pro. Thanks for joining our webinar this afternoon. Bob Richardson, our Vice President, will be covering all things LIFO in the next hour. Feel free, if you have any questions, to leave them in the chat or reach out to us directly afterwards. We greatly appreciate your time this afternoon and look forward to building business relationships with many of you.
Thank you, Jamie. Good afternoon, everybody. My name is Bob Richardson. As Jamie said, I'm the VP of LIFO Pro, and today I'll be presenting our 2022 LIFO Lookout and Opportunities Guide. Today, we'll provide training on a variety of LIFO issues. CPA firms will learn how to proactively explore LIFO rather than passively reacting to it. You'll also find out how accounting firms of all sizes can utilize our resources to make exploring LIFO a reality without having to devote a substantial amount of time and resources in doing so. We'll teach you our simple and easy to follow 3-step process for identifying and prioritizing the best LIFO candidates. And you'll also learn how your clients can obtain free comprehensive benefit analysis. And you also learn about how being on LIFO can be far simpler than most believe. Before I get started today, I'd like to remind everyone that this webinar is eligible for 1 hour of tax CPE. So if you haven't already done so, please go to the cpaacademy.org website, log in to create an account, and access the webinar through their site in order to ensure you receive your attendance certificate from them. And on that note, just another friendly reminder that we'll have 4 poll questions during this webinar in order for attendees to receive their CPE credit, and we'll ask them about every 10 minutes. LIFO Pro is a third-party service provider and LIFO software vendor. We have a nationwide client base including Walmart, Kroger, General Mills, Eastman Chemical, Kimberly-Clark, and SuperValue. We also are a third-party service provider to many CPA firms and also work indirectly with hundreds of different firms on behalf of their clients. At LIFO Pro, our mission is to make being on LIFO as simple as possible and to provide the highest quality offerings. And in order for us to fulfill that mission, a key component of our business model is to partner with CPA firms and provide the most valuable resources, complementary offerings, and tools needed for their firm and clients alike. These partnerships allow for LIFO Pro to collaborate with hundreds of firms and their clients to provide them with all of their LIFO needs. The reason why we believe this is so important is that CPA firms act as the gatekeeper to many accounting decisions and outcomes that result from the advice and services the clients are provided by their CPA firms. And because of this, we work tirelessly to offer both CPA firms and their clients what we truly believe to be a turnkey outsourcing solution. A common question we are often asked is the subject of LIFO repeal. So on that note, I'm happy to report that as of today, there are no current general threats to LIFO. And based on recent conversations I've had with the LIFO Coalition, which is a DC-based lobbying group dedicated to preserving LIFO, we're also confident that no short-term threats to LIFO exist on Capitol Hill. With that being said, an important development we've noticed over the past year or so is the uptick in audits of LIFO calculations by the IRS. Although this increase has not resulted in any unfavorable outcomes for our clients, it's nonetheless been noticeable, and it appears to be related to the IRS releasing a LIFO records practice unit in early 2021, which you can download by clicking on the link in this slide. We point this out because your firm and clients already on LIFO should be considering whether they'd pass the LIFO smell test in the event of an IRS audit, knowing that the service has recently placed an increased focus on LIFO.
We have our first polling question: true or false? Inflation is a primary component in the calculating the LIFO reserve.
Shown on the screen now are Bureau of Labor Statistics Consumer and Producer Price Index inflation rates from the last 3 high inflation periods. And as you can see, the 20% PPI inflation that occurred in 2021 was at the highest level seen in nearly 50 years, and it came very close to matching the 21% PPI inflation that occurred in 1974. You'll also see that the CPI inflation has also been very elevated over the last 2 years, with 7% inflation that occurred last year and over 8% year-to-date inflation that's occurred in 2022. The key takeaway is the inflation we've experienced over the last 2 years has turned out to be anything but transitory. So what can we learn from past high inflation periods to predict outcomes for the present and in the short term? Well, based on our research and our client base, we know the past 2 high inflation periods that occurred in the 70s and 80s resulted in a surge of new LIFO elections, as we have a large number of clients who elected LIFO during that time. In 2021, the number of first-time LIFO elections that LIFO Pro worked with was close to 20 times higher than the normal average of new LIFO elections that we normally work with, as inflation reached its peak in the PPI last year. Knowing this, and also understanding that inflation remains very elevated in most industries this year, and are even at record highs in certain industries, it's safe to assume that another large influx of LIFO elections will occur this year. So the key takeaways I leave you with, looking at past and present inflation periods of historic proportions, are as follows. 1, that 2022 will likely be one of the last periods in the foreseeable future to elect LIFO during a period of such high inflation that will end up resulting in material election year LIFO tax benefits. And 2, electing LIFO during a historically high inflation period such as now affords the following benefits. A, you can obtain first-year tax deferral or savings that would normally take many years to accrue during a normal or average period of inflation. And B, you increase the probability or greatly increase your likelihoods of maintaining a perpetually favorable tax position from LIFO, and in turn minimize the likelihood of a complete LIFO reserve recapture from ever occurring. Shown on the screen now are Bureau of Labor Statistics Producer Price Index, or BLS PPI, inflation rates. Shown on the top from left to right are each of the 15 2-digit BLS major commodity groups. Shown on the first row, as we can see here, and here's the commodity groups 1 through 15. And shown on the first row are the year-to-date or 9 months ended September 2022 inflation rates. And out of those 15 groups, you'll notice that 14 of the 15 have inflation for the current period. On the third to the last row, you'll see here, where I've got the laser pointer, the 9 months ended September 2022 inflation, and we've developed a multiplier to compare this year-to-date inflation against the 20-year average inflation. And what you'll notice is that 13 of the 15 multipliers here have inflation multipliers of greater than 1. This means that all but 2 of the 15 BLS groups have year-to-date inflation that's higher than the 20-year average inflation rate shown here, right above the inflation frequency row. And why this is important is that it means that 2022 will be a great year to elect LIFO in most industries, or for example, 13 out of the 15 here, because the election year tax benefits from LIFO will be higher than what you'd normally expect to obtain in an average period of inflation. For example, let's take the 1/1 machinery and equipment year-to-date inflation rate of, as you can see here, its year-to-date rate right now is about 8%. Well, that's nearly 7 times higher than the 1.2% 20-year average annual inflation rate. So what does this mean? It means that in the period of electing, if you were to elect in 2022, you could obtain essentially close to 7 years worth of normal life, you could obtain close to 7 years worth of normal LIFO tax benefits in 2022 alone. On the fifth to the last row, and we've got it labeled the inflation frequency 1202 to 12/2021, you'll see inflation frequency values listed for each BLS group. These values are important to understand and use because it's a quantitative metric of the price volatility for any given industry. And it's one of the criteria that we use at LIFO Pro in our proprietary Good LIFO candidate scoring system, which helps us determine whether or not an industry or a company is a good LIFO candidate. To illustrate this point, the 1-2 furniture and household durables PPI has had inflation in 20 of the last 20 years. So with our scoring system, they would pass the LIFO smell test by all means, and you could likely count on this type of industry to act as an annuity of constant proportions, since out of all of the last 20 years, it's resulted in inflation in those last 20 years. Now, past performance isn't always a guarantee of future results, but in the absence of it, it's the best way of gauging good candidates. And as you see, there are certain industries where you're going to have 14 out of 20, 12 out of 20. So a higher inflation frequency rate will yield a better overall LIFO election candidate. But my two key takeaways from this slide are as follows. To understand, there are more industries and companies that will be good LIFO election candidates this year than there are ones that aren't. There will certainly be selected industries where LIFO elections won't or shouldn't occur, but outside of those industries, there's a wealth of great LIFO election opportunities where the first year inflation and LIFO tax benefits or savings will be many times higher than historical norms. And second is to realize that all supply chain stages or industries can use the BLS PPIs to measure LIFO inflation. In other words, even though these indexes are derived from government surveys that are surveyed on manufacturers and producers, wholesalers, distributors, and retailers can use these indexes in addition to manufacturers and producers to make LIFO calculations. Shown on the screen now is a similar looking table, but instead for the consumer price indexes or CPI. So from the left to right here, rather than commodities, are BLS major expenditure groups, and we've also included selected CPIs on the far right for auto dealers. An important concept to understand is that although any company can use PPI for LIFO, only retailers can use CPI. But this does include auto dealers, and we saw a huge influx of auto dealers either elect LIFO using CPI last year or switch from the alternative LIFO method to the IPIC method, which infers the use of an external index because the inflation was so much higher than the alternative LIFO method. And so key takeaway from this slide is to know the best opportunities for retailers who could potentially elect LIFO using CPI will be grocery stores, supermarkets, and auto dealers. This is because the CPI inflation for our supermarket clients that we've done 2022 LIFO calculations for has been between 8 and 12%, which is several times higher than the historical averages, which, although is not a comprehensive or complete picture of a supermarket's product mix, the far left index of food and beverages, 8.8, 9 months ended September 2022. And as we explained earlier, this inflation multiplier, you're dividing the first row, current year's inflation rate, divided by 20-year annual average inflation. So that's your not simple average, but compound inflation rate over 20 years of 2.5. So you're at a 3.6 multiplier. And it's very elevated in a lot of other areas of the CPI, just as it was in the PPI as well. So on that point, There will be great opportunities for those industries. You're looking at 5-6% inflation for new vehicles and auto dealers, and also 9% inflation for their parts. And auto dealers and supermarkets are likely the most predominant users of LIFO. So knowing this, a lot of them are probably already on LIFO, but for the ones that aren't, that are clients of yours, we highly recommend exploring LIFO for them. And for the ones that are already on LIFO, there's probably great opportunities to consider the use of the IPIC method for both supermarkets, grocery stores, and auto dealers, as there certainly were last year.
And we have our second polling question, another true or false. The inflation that's occurred between 2021 and 2022 are the highest levels seen since the 1970s and 80s. Thank you.
So what makes a good LIFO candidate? LIFO Pro developed a simple to understand 3-pronged scoring system to easily identify good LIFO candidates. That system or criteria are as follows. 1, historical inflation frequency, where there's been inflation in more than half of the last 20 years. The best LIFO candidates have high inflation frequency because the more often inflation is expected to occur, the higher the likelihood that LIFO can act as an annuity, and the lower the likelihood of deflation or LIFO recapture to occur. The second criteria is having a historical average inflation rate that's 1% or greater. This ensures the inflation historically experienced can be expected to provide sufficient tax LIFO benefits. And although this number may seem low to you, we have a large number of clients that are supermarkets, and many of those clients have a 1% long-term average inflation rate. We'll have certain supermarkets that may have as much as 2-3% inflation, but for the ones that don't have the high inflation departments within their stores, such as pharmacies, alcohol, tobacco, they're going to be closer to 1 or 2%. And then 3, having an inventory balance of $2 to $5 million. So what we're saying is, we would tell a company that doesn't meet these 3 criteria, look, you're not a good LIFO candidate. Do you want to get on LIFO? And the company is the ultimate decision maker on that sort of decision. But when we work with due diligence, our objective advice involves these 3 criteria. So if these 3 criteria are met, we then look at, if you are a good LIFO candidate, you have to ask the question, are you a good LIFO election candidate? And the way we take a look at that is to not only be a good LIFO candidate, but to also have an election year inflation rate that's greater than or equal to the historical average annual inflation rate. So for example, if a company had a 2.5% long-term average inflation rate, if we're looking and performing an analysis in that year in a period where their current period's inflation is projected to be only 0.5%, we'd likely tell that prospective client, this year is not as good as it normally would be inflation-wise and tax deferral or savings-wise either, for that matter. So we use really objective and what we believe to be the best data available in the absence of a crystal ball, in terms of knowing when's the right time to elect, what's going to happen in the future with LIFO. We'll use our historical data to model and try to develop a really good illustrative understanding with our tables, graphs, and projections with the software that we have in-house to make calculations and perform LIFO benefit analysis. But if you're a CPA firm thinking, well, that's great, LIFO Pro has software, LIFO's easy for you guys to get something like that done. But this is a foreign language for us to have to try to find our clients that could or may not be good candidates. Well, the good news is we've prepared a tool that allows you to make it easy to identify LIFO calculations within your firm. And if we were to take a quick look at it, I would suggest you download it. Can't cover and spend a lot of time looking at it, but in that file, which we've provided a link to, we've handpicked the best LIFO candidates, and in this list, you'll find close to 100 different BLS commodities, as well as CPI at the bottom there for auto dealers. Anyways, these are all great LIFO candidates in general. So we've gone through our 3-step scoring system, and we've also gone as far to determine whether they're good LIFO election candidates or not. So we highly encourage you, make use of that list. Get into this slide, look at the election year LIFO tax savings formula, an example, and have intelligent conversations with your clients about exploring LIFO. And what I mean by that is that with the resources we're providing you, you can quickly find what your client's potential or likely inflation could be based on the BLS inflation and plug into this tool or formula the rates and numbers that you need, which would be 1, prior year's inventory balance at cost, 2, current year inflation rate, which you can find in the Excel file. And from there, you can determine your year 1 LIFO expense and tax benefit. So on this example, we started $5 million of inventory, 10% current year inflation. You plug those two numbers in, $500,000 of taxable income reduction or LIFO expense in the election year. And you can go as far, if you have your combined federal and state tax rate, plugging that in, taking the product of that number and your LIFO expense. In this example would be $200,000 of after tax cash savings. So this is a great set of tools, and we encourage you to use these formulas as an easy way to have much more productive conversations with clients about LIFO, as it could yield higher responsiveness when you discuss LIFO, instead of just throwing an email or a call out there saying, hey, LIFO could be good and could have some risks involved. What do you think? Well, if you give some dollar figures and real numbers to think about, we found that it's much more effective. The most common 3 misconceptions that that's listed on this slide right now, and what we hear about most when we speak with companies about LIFO, those misconceptions ignore the existence and the predominant use of the dollar value LIFO method. The beauty behind the dollar value LIFO method is that it avoids all the undesirable characteristics of being on LIFO that would otherwise occur if you used what's called the specific goods or unit LIFO method, which is often taught, or is the only type of LIFO taught in college accounting, in which for many that haven't been on LIFO, that's the extent of their experience, is remembering how much of a pain it was to deal with it in their accounting course. But obviously, many of you are with CPA firms and you've looked at LIFO a lot more than that. But it's important to understand, if you don't work with LIFO a lot, that the vast majority of companies on LIFO use dollar value LIFO. And because of this, when electing LIFO, your accounting system will track costs the same exact way that it did before electing LIFO, meaning no changes are made to the way that item costs are tracked within the accounting system. And under dollar value LIFO, your cost accounting and purchasing and sales functions continue being made the same way that they did prior to electing. The one small addition, if you want to call it a change, that occurs is that a contra inventory account called the LIFO reserve has to be added to your subledger. So inventories continue being tracked the same way that they did and have before prior to electing. It's just a matter of making a LIFO calculation outside of your accounting system at the end of the year. So it's important to stress that to clients and reiterate to them that LIFO doesn't have to be tracked on a unit basis. And we've come across situations where companies are using unit LIFO, It provides less long-term LIFO benefits. So if you have clients out there using unit LIFO, we've done case studies where if you pan it out over 2-3 decades, it will create less LIFO tax deferral than dollar value LIFO because of the inherent limitations posed by the specific goods method. And it's another reason why, if not the complexity, more favorable tax answer is another reason why companies would want to use dollar value LIFO. So long and short, you're just making a side calculation outside of your accounting system to calculate inflation with dollar value LIFO, determine your LIFO layers or decrements, and to calculate your LIFO inventory balance, LIFO reserve, and LIFO expense. So once this is done, assuming your LIFO reserve increased, the only step that you're taking is to record an accounting entry to debit cost of goods sold and credit the LIFO reserve account, which reduces and revalues the ending inventory balance from cost to LIFO. Another common misconception that likely causes many companies that should be on LIFO to not be is the idea, I guess I'll call it misconception, whatever it may be, but the idea that the administrative burden and costs and uncertainty outweigh the benefits. So this misconception, in our opinion, is certainly false, because our outsourcing solutions makes being on LIFO as simple as possible, and it allows companies to create tax deferral or savings while avoiding all the hassle. So the only required work from our clients is to export readily available data from their accounting system to an Excel file, send that data to us, and make an accounting entry to adjust their LIFO reserve balance upon receiving their LIFO report package from us. And we'll talk more about how that works in later slides. This data is a ton of data crammed into one, so get out your magnifying glass. We're sorry for it being so tiny, but it's a great way. So if you got the magnify function, it's a great way to understand what so commonly gets misunderstood and ends up being a huge fear for companies that, for ones that are on LIFO, they, I guess, live maybe in constant fear of their LIFO reserve disappearing in any given year, because there's so much uncertainty outside of having a valuable report like this available at their use that anyways, this proves many misconceptions, but the two misconceptions that we're going to focus on is this misnomer that normal inventory decreases can cause LIFO reserve recapture even when there's inflation. And the second misnomer being that the LIFO reserve can't grow unless inventory values grow at or above the level of inflation that occurred that year. So as you can see on this screen, this company, the sample company here, as of their last year end, had a $28 million inventory balance. So that was 2021 was their last year end close. Had 10% inflation last year, cumulative index of 22%, inventory balance at LIFO of $25 million. So if you take those two numbers, they had a $3 million LIFO reserve as of the last year end. So if we were to assume that next year for 2022, let's pick $25 million for their next year end inventory balance, and then we'll say they're going to have 1% inflation. So in this case, the resulting figure is about $250,000 of LIFO expense. And as we discussed earlier, LIFO expense represents an increase to this year versus last year's LIFO reserve. If it was income, it would be a decrease. So what we're saying here on this screen is anything is green is this year versus last year LIFO reserve increase or decrease. So even though the inventory decreased by $3 million in this example, this sample company's LIFO reserve increased by $250,000. So what would it take for LIFO recapture to occur under a 1% inflation scenario? Well, on this screen now, you'd have to go all the way to $17 million from 28 million. So an $11 million decrease, or 40% this year versus last year inventory levels, to even get to a place where LIFO recapture occurs. And it is a very small amount. If you look, okay, prior year end LIFO reserve of $3 million. So in a lot of cases, heck, you'd have to get down to $10 million of inventory to get what I consider to be a material LIFO reserve recapture. Because in these first few examples, you're talking a couple $100,000, which is immaterial in proportion to their $3 million LIFO reserve. So I guess another key takeaway is that our solutions allow, okay, with software, you have that report readily available at your hands at all times. So if you want to do a projection now, a month from now, and do it 100 different ways and set your increments at different index values. I didn't point it out, but what's driving this is based on last year's LIFO figures, knowing or being able to project and do ad hoc estimates from left to right, you can set your starting and ending points of inflation or deflation on the second row here, and from left to right, or excuse me, top to bottom, from the far left, you have inventory balances at cost, and take any certain inventory balance and inflation or deflation figure and quickly figure out what the LIFO expense, which would be green, or LIFO income, which would be in red, would end up resulting as. And a very useful tool in our software, you'll see here at the very bottom, if you're trying to do planning, okay, where does LIFO layer erosion start to occur? Well, at the bottom of that report in our software, and we provide this report to clients, you would know that if you have 4% inflation next year, you need to have at least $29.2 million of inventory to maximize your amount of LIFO expense next year. Where if you get above that level, as you see on this screen, you're going to have $1.1 million if you're at or above that level. If you get below that level, that's where you see layer erosion LIFO income to occur. And the waterfall effect, you slowly see less and less LIFO expense occur until you reach a point where you're in the red with LIFO recapture or income. So as we move into our next set of slides, and are we due for a poll question, Jamie?
After this one?
Okay, thank you. We're going to speak for the next few slides about the top 2022 LIFO planning strategies and opportunities. And on that note, I just want to stress, and I'll probably say it a handful of times, that the 2022 inflation will likely be well or far above historical averages in many, if not most, industries, which will create some of the best LIFO tax deferral or savings opportunities seen in the last 4 to 5 decades. And when compared to a normal inflation period, this means that there will be many years worth of LIFO tax benefits to be obtained in a single year by electing in 2022. And I've said it on prior slides, but once again, reiterate this idea that when you elect LIFO in a year where there's very elevated or record high inflation, it greatly increases the probability of the year one LIFO reserve to be at a level where it's going to withstand any future LIFO recapture or taxable income that could potentially be created during deflationary periods. So what is shown here are 2 examples assuming essentially the same inflation rates, inventory balances. So let's kind of think about this as one company, and they can't figure out, do they want to elect LIFO in 2022 here on the left or in 2023 here on the right? And what this obviously is trying to illustrate, you've got 10% inflation in 2022 on the left, 2% inflation in 2023 on the right. So what occurs? What were we talking about, Bob? Well, on the left, you'll see LIFO reserve ends up being $2.5 million, excuse me, $2 million higher than the LIFO reserve that ends up accruing over a 10-year period just 1 year later for the example on the right. But what we believe to be is more important, okay, Out of the 10 years, 7 of the 10 years were inflation. But with the 3 years where there was deflation in LIFO income, and the example on the left, you'll see the company in the first 3 years, $1, $2, $3, $2 million out of the gate, another $500,000, 200,000. Slowly built a big LIFO reserve, but in year 4, when they had deflation, despite there being 700-800 grand of LIFO income or recapture, which is a reduction to your LIFO reserve, they still had a $2 million reserve after that deflation event. And even after the second consecutive year of deflation, a $1.7 million LIFO reserve. So long and short is, they went through years 1 through 10, and their LIFO reserve remained well above zero, meaning they preserved the vast majority, not the vast majority, but the good chunk of their LIFO reserve that they started with. They continued building after those deflationary periods and even grew it from a $2 million starting point to $4.5 million at the end. Whereas on the right, you had the same income that occurred in those 3 periods, but because they started in an average rate of, or in a period of average inflation, they only started out with a $500,000 LIFO reserve. And by the time that 2025 came around, they were in the red, meaning they were paying in more from being on LIFO compared to if they weren't on LIFO, or tax-wise. So it's when you have opportunities like 2021, now 2022, to elect in a very high inflation period, I don't want to necessarily call it once in a lifetime opportunity, but we looked at the graph at the beginning of this webinar to understand it's been 40 or 50 years since inflation that we have now. It's been decades since it's occurred. So we highly recommend looking at LIFO for your clients.
Got our third polling question. Another true or false. There are more industries that are good LIFO candidates than those who are not. Thank you.
Moving back into the LIFO planning strategies and opportunities, we've developed a 3-step system for companies to use to greatly simplify identifying good LIFO candidates. So rather than waiting for your clients to come to you to ask about LIFO, or for a competing firm to do prospecting and identify LIFO and present that opportunity to your clients, we highly recommend using this simple process that involves these 3 steps. Build a client list, identify LIFO election candidates, perform client outreach. And with this 3-step process, it's designed to provide you with the same key figures that we use to identify good LIFO candidates and perform LIFO election benefit analysis. Although it's not a LIFO calculation tool, it can serve as a highly effective identification and estimation tool. And it'll give you key figures such as the estimated election year LIFO expense and tax savings upon copying and pasting your client list into the template and matching your client's industry with corresponding BLS commodities or categories, which can be found in the LIFO election candidates by BLS code sheet in that file. The 3 steps are simple, and we'll walk through it very quickly. You can download the list. We encourage you to use this. Step 1 would be getting the client list out of your CRM or client database. And preferably, if that client database has a field for describing your client's industry type, we highly recommend doing so. But the long and short is, you paste that information into the LIFO Pro election candidate target list Excel sheet, and you'll be ready to move to step 2. And step 2 is identify the good LIFO election candidates. So as it's shown on the screen now, you've not only got your clients and the industry types put into this template or tool, Excel sheet, whatever you want to call it. Long and short is, locate the BLS codes in the election candidates by BLS codes Excel sheet. And once you identify the most applicable BLS PPI or CPI code that you've matched to your client's industry type, or maybe you have a primary business activity or description is what you've pasted into this field, that's fine. What we need to do is, what is your company's or client's product mix, and locate the BLS code that most closely matches your company or clients. And from there, you'll have automatically populated figures starting in columns F all the way over to column O, estimated election year LIFO expense, tax savings, the inflation, the very important tools that we use as criteria for measuring good election candidates, and both good candidates and election candidates. All of this will be at your fingertips, and it allows you to much more intelligently perform client outreach and to explore electing LIFO for clients in a manner where we've found it to be much more effective when you approach your clients about exploring LIFO. And when we share this with our CPA firms that we partner with, their clients are much more apt and willing to want to perform an analysis. And it's a great conversation starter, and we recommend using it. Lastly, on the strategies for companies that aren't on LIFO, is to be aware of the following. There are requirements that if you elect LIFO that you should be aware of, and there are also disclaimers, so to speak, that in the event of future business transactions or events occurring, good to know that if you're on LIFO, you have to be aware of. We had a client recently convert to an S corporation, so in that case, their LIFO reserve had to be paid into income and spread over a period of time, 3 to 4 years. So, you know, those are events that can happen. We had a company that had an asset sale, and so that's another situation where you would restart LIFO. So please keep that in mind. In a lot of cases, most of our clients don't ever end up terminating their LIFO election, but it's good to know the things that are on this slide. And let us know if you have questions on that. We've got easy answers for dealing with issues that may not be addressed on this slide as it relates to LIFO election requirements. For firms and companies that are on LIFO that are using LIFO methods other than the IPIC method, one of the best strategies that we in any given year would recommend, but in 2022 especially with the inflation being what it is, would be to make a analysis, or for us to perform a free review where we would perform a pro forma IPIC calculation. So why switch to the IPIC method, or why do companies use the IPIC method? Well, for one, tax deferral maximization. It often creates more inflation than actual internal product costs. Why is that? There's a variety of reasons, but we could do a webinar, probably a 2-hour webinar if we really wanted to, on the IPIC method. But it's important to understand that, okay, out of our client base, the probably overwhelming majority use the IPIC method. And there are multiple reasons for it, but tax deferral maximization is a primary component of that. Minimize IRS scrutiny upon audit or reduce audit risk. So the IPIC method is an IRS safe harbor method. So if you're in a situation where there could be potential audit risk, it affords taxpayers audit protection from prior period LIFO calculation errors or an error. And because of that, we've helped hundreds of clients switch to the IPIC method. And another consideration all companies should make regarding the IPIC method is to understand that if you were to compare the potential risks posed by both, okay, internal versus external inflation measurement sources, there's far less scrutiny that can be placed onto the IPIC method inflation calculations because the Bureau of Labor Statistics, or BLS, they are the owner of the price indexes being used to calculate that inflation. With internal indexes, the owner and the burden is on the taxpayer to prove the reasonableness and accuracy of their inflation calculation. And because of this, there's just greater general potential of internal index calculation being challenged by an IRS field agent in the event of an audit when compared to an IPIC calculation. And with the switch to the IPIC method, it's applied on a cutoff basis, meaning all aspects of the change are applied prospectively beginning in the year of change, and it builds off of the LIFO reserve accrued using your old methods up until the year prior to the change. So what does this mean? Well, this means for tax purposes, there are no complicated adjustments or retrospective accounting. And it doesn't happen often, but we've seen it. So I'm sure out of the hundreds of people that are on this webinar right now, maybe there's one. For a client or a company who's out there right now listening, if you've overstated your LIFO reserve for 2 or more consecutive periods using a non-IPIC method, if you were to make a switch to the IPIC method, you'd be afforded the luxury of locking in your pre-change LIFO reserve and obtaining audit protection from the IRS, which precludes the service from ever proposing an adjustment on prior period overstatements or errors in the event of a future audit. So those are rare cases, and we don't like to advertise the IPIC method as being a tool to hide your overstated LIFO reserve, but it's truly, in the eyes of the IRS, they developed this method. I'm sure the accounting community as a whole had a part in it as well, but the long and short is the IPIC method, the IRS considers it to be less prone to manipulation by the taxpayer in terms of being able to get your inflation, your internal costs cooked or baked up or down to be whatever you need it to be in a certain year tax-wise. And let's say you run into a year where you're not profitable, or for financial reporting, it's more important to have less LIFO expense. That if you're doing IPIC external indexes, applying those mechanical steps correctly to calculate LIFO inflation using BLS indexes, it has less ability and chances of being manipulated by the taxpayer.
And we do have our final poll question here. Are you with a CPA firm or a company? Thank you.
The next slide talks about LIFO Pro's complementary offerings. And regardless of if you're a CPA firm dialing into this webinar today, or from a company or private industry, if you're not on LIFO or have clients that aren't on LIFO, we highly suggest not just pulling the trigger, looking at companies that you just figure they have inflation, so the plan is to elect LIFO and move along. LIFO election benefit analysis, in our opinion, is essential. It increases the longevity of how long companies will stay on LIFO, because if you have a full comprehensive picture prior to getting onto LIFO, this is what we know about, say, the last 2 decades in the history of how inflation has worked for our particular product mixes. This is what that has resulted to dollar-wise in terms of if we were to make a what-if assumption of electing LIFO 20 years ago, use our current period inventory levels, and apply that to get some sort of idea of what LIFO could mean for us in the next 20 years, you're all of a sudden much more apt and comfortable with not only considering electing LIFO, but much more confident in kind of knowing, this is what I know from the past, this is what is at hand now in terms of potential benefit in the election year. And in the absence of a crystal ball, and being aware that past performance isn't always indicative of future results, I feel a lot better that I at least do know that the past performance is likely to be a better guess than having nothing at all to know what could happen in the future, because LIFO is a long-term planning opportunity. We have clients that have been on LIFO for 60, 70, even I think 80 years in some cases. So it's important to understand that the benefit analysis that we perform is truly comprehensive, and we're running short on time, but I'll try to share a quick example with you where this shows the 20-year pro forma LIFO calculation that we do, and it'll show far left using your company's product mix. We'll get your, just need this year and last year. We make it easy for these analysis to occur. We don't ask for 20 years worth of data. We're going to use this year's product mix to make this 20-year pro forma LIFO calculation and model what the LIFO reserve would have been if you elected 20 years ago. And it's a great way to get a gauge of not just this year's potential LIFO benefits, but long-term as well. And we'll also provide a comparison of using an internal versus an external inflation measurement source for your election year. So what I'm showing on the screen now is external, being the IPIC and using BLS, CPI or PPI, and we show differentials where $2 million under external, 1.4 under internal, and it allows for you to make an educated decision and realize that there's more tax deferral or savings that you could obtain using one versus the other. That you don't want to go in this blind as a CPA firm. You should have somebody like a LIFO expert doing this work, because we have software. This happens in hours, not days and weeks, with our software and with the expertise that we have. And you're looking at inflation frequency, the 20-year average inflation rate. So we truly have a system. It's not our best guess, and we're hoping for the best, but expecting the worst, because LIFO could be a real problem years down the road. No, we have our scoring system, and you see this in our analysis report, where 20-year average annual inflation rate, the inflation frequency. Are you meeting those criteria, yes or no? And based on those criteria, we're able to make what we believe to be very objective and valuable recommendations to companies. And also, I don't believe we touched on it for very long, but for reviews, companies that are on LIFO. So if you have clients that are on LIFO, highly recommend. You know, the IRS is auditing more than before. Do we think there's a high likelihood that it could happen to your client? We're not sure. We don't guarantee or think that it's going to happen to everybody, but we've had our clients audited recently more than had been prior to that practice unit release. So why not for free get a good idea of if LIFO has really been done right or not for all these years? That we'll do the pro forma as filed as corrected calculations to model the differences between the two if there are errors. And we'll do the pro forma IPIC calculations to compare proposed versus present methods to see if there could be a material differential between using one alternative versus the other. So we provide free valuable tools that are only available from the LIFO experts. And it's something that we take a lot of pride in doing, and we get it done quickly. So we greatly encourage you to consider using those resources and complementary tools that we provide at no cost. So what we call turnkey outsourcing solutions is a LIFO calculation service where your client, or if you're a company, you would just outsource every possible aspect outside of recording your journal entries. So since we don't have access to your general ledger and your obviously your network, that aside from that, and pulling the basic accounting data out of your accounting system, which typically looks like I hear it called perpetual report. We call it item detail report. Others will call it stock status report. Just but that's already in your system. Exporting that out of your system, we go to town, do everything else, BLS category assignments, the inflation calculation, and all the finer aspects of dealing with new items, reconstructing costs, looking at exceptions, outliers. So we get into the weeds, deal with all the LIFO heavy lifting, use our software to automate the inflation calculation, LIFO reserve calculation, documenting the LIFO calculation, and storing it in our software, and also using it to package a LIFO report that's electronically delivered to clients. So you can avoid all the hassles of LIFO while preserving tax deferral and savings, increase transparency and understandability, and also eliminate error-prone Excel spreadsheets, guarantee calculation accuracy, and eliminate audit risk. Lastly, focus on forecasting and planning rather than being stuck in the weeds working on compliance. And when we're talking about LIFO solutions, we'd like to look at it as a complete range because we have outsourcing, but we also have many, many clients that license our software. And because of this, we spend a lot of time, in addition to the reason, another reason being that we use it a lot and on a daily basis within our offices to provide outsourcing services. We spend a lot of time developing our software and continuously improving on it. So over the years from where it started, it's now in a place where it has multiple inflation calculation modules. And outside of an alternative LIFO method inflation calculation, it now can handle any other type of internal index calculation, in addition to completely automating IPIC LIFO or external index calculations. So you can essentially, as a user of LIFO software or our software, minimize the time spent to complete LIFO calculations in-house. So there's benefits for companies and CPA firms alike because we've got CPA firms that license our software. And even if you don't, if your clients license our software, think about the difference between mulling through series of Excel tabs or sheets where you have to, so you got multiple pools, so you've got a pool for each sheet and then a separate set of sheets to calculate just the LIFO reserve, and then the other sheets are just the LIFO layers, and then you got other sheets to calculate. Get rid of all of that. Put it into our software. You've got one place where everything is stored. You then have outputted, user-friendly, comprehensive reports, summary format, detailed format for all years, or just this year only if you want to make your accounting entries and you just need the important numbers to book your LIFO reserve change. The software is a great tool, and the benefits aren't just on your client's end. It'll make audits go a lot smoother, and you have a lot more comfort that you guarantee calculation accuracy and understand LIFO on a higher level. You don't get lost in the forest staring at all the trees. And to reiterate on that note, we have a standard process. We make it easy from start to finish. If it's a company that's on LIFO, we'll start with a review. It's not essential, but we recommend it. So we'll get all the documentation within a week's time, get the review done, have a call with you. It's a free review, but what we can also talk about is what it would mean to outsource the calculation to us, license our software, trial the software, and we'll go through the onboarding, calculation, and reporting, the three following steps. And we have quick turnaround time. We're talking days and maybe a week, 2 weeks at the very most if you're a Walmart, Kroger, Target of the world. Otherwise, we're talking a week's time to turn around everything at the very most. And on a recurring basis, it becomes a lot simpler. We provide 3 free interim estimates. So with just sending us an email, we'll use last year's product mix to do an estimate for you. So we're getting towards the end here. Key takeaways. 2022 will be one of the best periods to elect LIFO in the last 4 decades. CPA firms should be proactively exploring LIFO for their clients rather than passively reacting to it. And most companies have minimal knowledge about LIFO and therefore will never consider electing unless their firm has resources and expertise and is proactive with exploring LIFO for their clients, and that their accounting firm partners with somebody like us. So the key takeaway from all of this is you've got someone like LIFO Pro with resources and solutions to provide everything as a firm or for your clients, everything they need to make LIFO being as simple as possible. So you can streamline as a firm your LIFO exploration and identification efforts. And firms can also obtain turnkey solutions and LIFO software. And we have complementary analysis that's comprehensive and free LIFO training that we offer to both firms and their clients. And I'm sorry that we're going a little long on time here, but we're right at the end, that this is our last 2 slides. Actionable items, the last time I'll reiterate it, that we greatly encourage companies to explore LIFO elections for clients and prospects that aren't already on LIFO in order to identify the good LIFO election candidates. You can start right now by downloading our LIFO candidate client ID tool and following the steps within that file. And within a couple minutes time, once you get that client list put into that Excel file, you can go from LIFO identification to outreach, and you're all of a sudden, and you can prioritize and figure out who's the best LIFO candidate. I've got 5 in this list or 10 in this list. Let's use LIFO Pro's inflation rates and all the fields that we've provided in this tool to sort from largest to smallest. If we think that election year LIFO expense is the most important number, we want to contact those companies or clients first, that you can do so. You can easily prioritize and devote your CPA firm's resources to the places that they should go towards first. In other cases, you may have clients that are risk averse, so the inflation frequency may be important, that you don't want to elect LIFO or recommend LIFO elections as much to low risk tolerance clients with, if you have inflation frequency, say of only 12, 13 years, you want to look in those sort of risk profiles, the types of clients that are in industries where the inflation frequency is closer to 15, 17, 20, like the furniture example, much more higher inflation frequency. So we've given you all that you need to make hay and be LIFO rainmakers that we know that your firms can be. There's a lot of firms that have chosen to do that, and we know just personally from speaking with their clients that they greatly appreciate those firms going out of their way to find these awesome LIFO tax deferral and savings opportunities for them. So we recommend taking that time to do it, because it'll be well worth your firm's and clients' efforts. And we'll go from there. Once you get there, you perform the client outreach, make the referrals, and introduce them to us, or have calls with us. We'll do the rest of the work, the benefit analysis, the outsourcing, software licenses. And the same can be said for companies, clients that are on LIFO. You can download the documentation request list to get started if you've got a client in mind that is or isn't on LIFO that would possibly benefit from getting a free analysis or a free review. So we recommend you checking out our resources provided on the last slide here. A lot of these resources are also available on our website, visiting our website. We greatly appreciate you spending time with us over this last hour to talk about LIFO. And quick few housekeeping items. We remind you that for attendees who've registered through the CPA Academy website, be on the lookout for an email from them that'll contain your completion certificate. And we'll be holding another LIFO webinar next Thursday, November 10th at 12 p.m. Eastern Time. So if you had colleagues that couldn't attend today, let them know, hop on our website. We've got links to sign up for that free webinar. And we're always happy to set up a LIFO training session for a company or for your firm. So just reach out to us and we'd be happy to have a more intimate conversation about your specific firm or company needs. And with that, we hope you can utilize everything that you may have learned or picked up on during this webinar today and appreciate your time today. Thanks for tuning in and take care.
Thank you.